Hello friends, we keep hearing from analysts all the time. You have to buy the share when they are at the cheapest rate so that you can get return return on investment when they really grow big. We always heard from Warren Buffett as well, when the market is greedy, sell it. And when the market is scared, everybody is running out, just go buy it. But one challenge we always find in each of our life is how do we know when is the lowest price of the share, and then how and when we should enter and buy it. So this presentation or this video will help you to identify how do we get to the lowest price of the share and what should be our strategy to invest. So let us understand what could be the contributor for these low price scenarios for the share. One could be the market crash. Crash could be momentarily, and most of the time it may last from couple of weeks to couple of days. But in some scenario, it could last for couple of months, like the COVID-19 situation that we are looking at now. It could also be related to the sectoral performance. Sometimes agriculture related shares are impacted because of the performance of agriculture or the rain, flood, or various other situation. Sometimes demand of the sector, it could be related to the urban demand or it could be rural demand. So the demand of the sector could also bring the share price down for certain company momentarily. Global clues, sometimes the impact is also related to the global, how is the global position of the sector is performing. War, social unrest can also bring the price of the share significantly lower. And we keep hearing about Middle East, North Africa, and also the regional Middle East wars that sometimes crashes the market for the moment. As good as the opportunity we see to buy share at the lower price, we also consider a risk, and that risk could be significant based on your capability on the investment and the amount of the investment that you are going to make. It is very important to understand this risk because you may lose your money altogether by taking some wrong decisions. So to help to mitigate this risk, it's important to identify the share. When we identify the share, we have to look certain criteria so that if the share is not following those criteria, is not qualifying those criteria, it may not be right choice to invest on it. Look at, first of all, we have to look at strong balance sheet. Choose large cap as much as possible. We have to understand these large cap companies have got so many sources of revenues. They diversify, they have a big team, they have one of the most competent CEO of the industry. So choose large cap as much as possible. Review P profit by equity ratio, and that is most important because that gives a clear indication of how did the company perform. Review news about the share chosen. Go to the Google or Money Control or Economic Times, and there are so many different platforms wherein you can just type about just type the name of the company and then look for the news if there is any something coming up, and the impact of the lower share value is not because of some bad news which or bad books they have it. It's always good to see that if you could buy the share at 52-week low price, but again this becomes more risky because we do not want to invest in a company that might go bankrupt. So we have to really evaluate the health of the company before we see this 50-week indicator. Review research identified by the demat account provider, and this is most important, and I would say take this in the top priority. So any of the research demat account that you have, they publish their own research, and they have different tabs for the research. And in those research, they identify each of these stocks in terms or shares in terms of their future growth or the forecast. Do consider those research requirements before investing. After identifying, evaluating, now is the time to set your target price. So I assume in the first two, the previous two steps, you have understood how to identify the share price, how to evaluate the share, and now you have to set the target price. So it is never advisable to put all your eggs in the same bucket. So try to divide all the investment that you are planning into 5 equal parts. So figure out the price to buy the first part. It could be any of the indicator from the previous step, second step, and just wait for some time to understand if the first part that you have already invested is going to fall. And then what I would suggest is wait at least that first part to fall by at least 5%. So the advantage of that is you will be knowing what is the direction of the fall, and then you keep trailing and keep buying at the lower 5%. So second part, third part, fourth and fifth, you keep buying at the 5% lower. So for example, the first part you buy is 5%. Second part you buy is 10% lower. Third part you buy at 15, fourth part at 20%, and fifth part at 25% cheaper than the first part. Remember, you need not to invest on every day. So when we are saying invest these in 5 parts, invest in such a way that each part is at least 3 days apart. So when you are buying the first part, you are on the 0 day, and when you are buying the last part, it is in the 12th day. If you see the share price instead of falling 5% step down, if it is coming up, then wait until it falls further before you go again. Do not buy once it starts coming up, because you are going to lose the margin, and then you are not going to buy at the price which is the lowest, that is the target for you. Important things that we should remember before investing is this is all applicable for long term. If you really want to do short term, do not follow this philosophy, because this may give you long losses rather than the profits. And share and equity may give negative results, as you know, due to the market condition, and market can always come and down. So do not think if you do exactly the same, you will always earn profit. There may be chances wherein you are hit by the losses. So evaluate all the risk before you invest. Idea is of this video is to seek the opportunities to earn a lot of money when everybody is scared and do not want to enter the market, but all of these return are on the longer term. So hope you like this video. Please make sure that you invest at your own risk, and always keep some money aside for the time when you need it most. Thank you. All the best.